I'm going to go over to the newsletters tab. You're going to see right here the opening call newsletter by Basil Chapman. Strongly recommend checking that out. Basil is very thorough kind of analysis throughout the week, and of course has a nice long form video. I believe he said on Friday last week. Additionally, what I always say with this is that there's a fantastic value added, and that is you get access to all of his subscriber webinars. And again, these pop up from time to time. So if you're a subscriber, you get to attend. Very, very much worth the price of the product. Let's move over right now to Basil. Yeah. Basil, how you doing?
I'm doing well. How are you?
Doing well. How is the just quickly? How's the temperature up there? I mean, we're pretty cold in Florida right now.
We are going to be very, very cold. It's in the teens, and in fact, it's going to get colder, and it's getting cold on the very day that I have to get a new heating system. So I'll be out Thursday and Friday out of heat, but I'll manage. Well, I'll figure something out.
We'll send you some blankets or something from Florida, Basil. Sorry about
more than that. I need a hotel.
Well, what are we taking a look at? Looking at the Dow right now, huh?
So let me just do this real quickly to remind everyone. Oh, first of all, thank you for talking about the video, the Friday video. This past Friday, I did a video, and I mentioned it on my show. And I'm going to mention it again. It was a video that was really like a webinar that I wanted to do. I just don't, with all the stuff going on, I didn't think I'd have time. So I just turned my usual hour or so video overview for the week on assessing where we are, what we go, how our positions have done, what we're looking at, into something a little broader where there are positions that, in fact, we're starting to put them on today. Yep. New positions, and what I'm looking for this first quarter of, at least for January, going to early February 2025. So that's very, so anyone who's signing up, in any case, if you went to a webinar, you would sign up for my newsletter to be able to go into the webinar, because they're usually for subscribers only, free. Yes. But otherwise you pay, and you can have a money back guarantee. But most importantly, this was quite an extensive one in great detail. So and one of the things that I just need to show right now for people who are perhaps new to my work, I try to identify the lowest low bar of a move. And then, if I'm correct, there should be higher peaks. I alphabetize the peaks sequentially, uppercase A, B, C, D, E, F, G. I enumerate them. So 1, 2, 3, 4, that fourth highest peak at peak D is where other things can happen. If from the buy signal, it gets upgraded at leg B or just early on to a buy mode, that implies that there should be at least 4 higher peaks. So let me get rid of this right now, and I'll show you what we're doing. So I discussed this with you exactly a week ago, well, a little bit more than a week ago. Last Monday, I said that based on many technical indicators that I have, and one of them was this pink and green downtrend little mini channel. I call it an inside track propellant zone, because every time the price gets there, that's where the price rallies up. In this case, you can see the very long-term resistance. That was the repellent line that gave that turn at the top. So I said a number of, with the VIX index and a number of technical indicators, I got a signal that says to go long on Monday first thing before the opening, to add to our long positions in the Dow, which we've done a kind of an aggressive long at the very low of the Dow. So we're in that position now using that Chapman wave methodology, because this is a leg B and it's much stronger than it was on Friday. And then you've got a technique that shows you a kind of a cup formation. There's a little dashed green line called the Chapman wave inside track repellent zone, and we've just nicked it today. And you've got the pink 9-period moving average going across over the black 14-period moving average green. That's really positive. That started on Friday. You've got the MACD. As the MACD, see it like the mouth opening. That's really important. That aperture expands. This little gray line right here, this is the daily chart. The gray line is the relative strength starting to come on very strong. And the stochastic, which I upgrade as soon as the stochastic goes over 80%, I can then think of upgrading from a buy signal to a buy mode and put an up arrow at the bottom, which says that there should be at least four higher peaks to come. This is still a leg B. whatever the high is today, if there is a lower high tomorrow, even by 1 penny, that will make a peak B. If there's a higher high than today's high by 1 penny, it just extends this leg B. It's called a floating ladder, and until we make the peak, it's called a leg B in this case. And the on-balance volume is a little bit weak, and that just says to me it needs to strengthen. And you can see this is very strong. Look at the weekly chart, how we bounce off support. So I like what I'm seeing right now.
Fantastic.
In the Dow.
Basil, please stay right there, folks. We'll be right back. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I'm joined right now by Basil Chapman. Basil, before we went to the break, we were talking about the Dow, some potential, maybe a buy signal. Who knows?
Yes, and as it stands right now, unless something changes dramatically, I have a buy mode, meaning that there should be higher peaks to come, and that we should get to a peak D. And that's for me a very good sign. I also like the fact that the IWM, which we've been long for quite some time, has had a very nice rally today. It needs to climb over this. Remember, I was talking about this inside track. This, in this case, it's a repellent zone. It needs to buy next week. What was today? Today's Tuesday. By Friday or Monday, this coming Monday, I'd like to see it actually not just hit, but trading above 232. It's at 229 right now, 396. And that's really important. I've been talking about the S&P 500 in relation to the small caps, the iShares, the Russell 2000. It's very important that you need to see that the Russell's moving very well. You want to see a broad market rally, not just very selective. Very true. I think that some of the tech stocks, the high-tech stocks in the Mag 6 or 7, I think they could slow down a little bit here. That's not too bad. And we're talking about, so the Dow is really a lot. It's kind of the old traditional way of looking at the market. So I'm pleased that that's moving along. And I also like the fact that, so I've spoken to you also about Bitcoin. I said Bitcoin's it was acting poorly and needed quickly to move higher, but that we did have a Bitcoin position with the IBIT, which is the iShares. That's the iShares and the Bitcoin. So we're very fortunate. We got the IBIT at about in the 38s around about the end of October, and here it is at about 60.84, just a hair away from making an all-time high at the 61.75 level. And I have to also look at these cup formations to see that there are many double tops that we've seen that have hit exactly within $1 or so of the previous left side high. But if correct, above 61.75, this should actually be a brand new buy mode in the IBIT. It isn't there yet, but it's very close, and the technicals have really improved. So far, it's very good. And you remember I said there's a relationship for me, the way I'm looking at the markets, between the Bitcoin and Robinhood, and that I really like the action of Robinhood. So we're fortunate we got in the 16s around about the beginning of August at the lows. It's trading right now at 50.23 in a new leg C in the daily, leg E in the weekly, and this is fascinating. The way it broke above the left side candle that I was looking at, there was the candle in September of 2021, immediately after the round number 85 high in August of 2021. It finally got back there, but it's actually trading. This is intra-month. We still got the whole month to finish, but so far it's trading above that candle. If at any point in the next 2 weeks or so, the Robinhood can trade, I'm going to make it a whole day. Usually I say 45 minutes, but it's a monthly chart. So for a whole day above 27, didn't mean 27, that was a mistake. Above 63, halfway into that long wick of the second month after the IPO, that'll be a really good sign to say that it's on its way to 85. So meantime, the key support for that is between 44 and 42. So I like the fact that some of the leadership that we saw going into the end of December has continued. That was really important, because for some, in some cases you get a complete change for the new year at different sectors, but there are other sectors that are starting to move. I like that very much. You remember I spoke to you, I think as we were wrapping up the other day, I said the TLT, that's the bonds, that's the iShares, was breaking at that point it had broken the left side support at 87.34, but that the TBT, which is the inverse, it's almost like a mirror image, had actually gone back, was on its way towards the 38.68 area, which was the high back in April. Well, it looks to me like it went, you remember I said some of these double tops in the cup or the V-shaped formation go to within a point of the previous high, and then they take a bit of a breather. Well, look, 38.68, the high of last week with a peak D, remember that peak D is so important, went to 38.98. And now we're pulling back. So I think it'll be quite important in broadening the market if the yields can actually start to come down, and then we can see perhaps stocks like Toll Brothers, Lennar, the home builders start to move up. And that's what I'm saying, that this is really important, that every correction is really a rotational correction. So there's a buoyancy to the overall market, even though you're looking at something pulling back sharply because something else takes its place. It's almost like the dollar is due for a rest right now. I made a peak F at 110.18. Here it is pulling back some. It's only a peak C in the weekly chart, but that daily chart says, yep, it's ready for a pullback. And at the same time, you've got gold moving very much higher. It's very nice to see. It should be testing that high that was made in the continuous contract the week of the 1st of November of 27.61. Oh, sorry, that was the low. The high was 28.20. Am I correct in saying that? Yeah, 28.75. So that's kind of the way I'm looking at the market. And in that video that I did on Friday for subscribers, I discussed stocks that I'm very interested in getting, and some perhaps we missed before. Now's an opportunity on any pullback. So I kind of like what I see. And at some point, I think this early part of the Trump administration. I think we're getting to a point where we're going to get a little overbought, and then there's a sudden rug pull, and that's the one that says, okay, now what's ready for the next section and sectors for the first quarter of 2025. So this is kind of a flurry of activity, and we'll see what is favored and what is unfavored.
Definitely, and I think you saw a little bit of that as well when you had the sell-off maybe like a few weeks ago, maybe a week or 2 weeks ago. You had some of these stocks that were extraordinarily strong, and they've continued to perform very well, even with the kind of indices moving up. And I like what you said as well, right? Like any kind of sell-off is more of like a rotation. And I was noticing that, essentially in the Russell, right? I've been remarking that it's been exceptionally strong compared to the rest of the indices. And I think that still demonstrates that the market itself is somewhat healthy and robust. I mean, you're not getting a bunch of, liquidity coming out of the market and into cash. They're just trying to figure out where to better allocate it. Because
that point that you're making refers to what I've been discussing for some time, in the sense that the Russell and the 500 S&P and the Russell 2000, completely different animals for a long time. Now we're starting to see some strength. You need to see follow through strength. This is just the start of a move. You need to see some follow through, and it's the same thing if you look at the XLF, which has the money center banks, the real biggies, JP Morgan, etc. Look, beautiful action, and finally you're starting to see, and maybe that's because rates are slipping a little bit, KRE, the regional banks, starting to move. And that to me that's this rotation that I'm talking about. And but in this case, I'd actually like to see the money center banks holding quite well as the regional banks start to come on. And the regional banks, there are a lot of them in the IWM, in the Russell 2000. So that kind of coincides with what you were talking about, yes.
Yeah, absolutely. And having those regionals healthy, again, I think is an indicator overall of at least the perception of the health of the economy. Basil, thank you so much for joining me. Guys, you've got to get Opening Call newsletter. Basil, it is always so much appreciated. We'll see you tomorrow morning, 10 a.m.
Thank you, Jacob. Have a good evening.